What's up, guys? Welcome to today's video. Guys, in today's video I'm going to be walking you through and show you all the things that we have all the things I have teach you guys in this beginners class. I'm going to combine it together and show you how you are going to apply all those things and be able to profit in the market. So make sure you watch this video till the end, because each step I'm going to combine all those things that I have been teaching you, showing you how to identify market structure, area of value, and entry trigger. We're going to combine it in this video and show you exactly how you can be able to apply it, so that you'll be able to know exactly when to click buy or sell. So make sure you pay attention, guys. So starting, remember, the first thing, if you have not watched the video, you can go and check it out. You see, check the playlist, click on the playlist in my channel and be able to see beginners class. You'll be able to see some of those videos. So I told you guys the first thing you need to do is to do what? To identify market structure. There are three things here I want you to watch. So if you take a look at this, you see here we are going to be looking at three things. The first one is market structure. As you can see it here, let me increase the size so that you will see it very well. Let's use 28. So as you can see it here, we are going to looking at three things here. We have the market structure, the area of value, and what? Entry trigger. So the first thing when you open your chart, like for instance, we are in what? Euro USD, all right? Daily time frame here. When you look at your chart like this, the first thing you need to do is to identify what? Market structure. When you look at this chart, you discover the market is trending down. So the first one is market structure. In this case, we have been able to identify that market is trending down. How do you know that it's trending down? It's creating what? Lower low here. As you can see, it's creating lower low after the break of this ranging market, market range here, and it break out and start creating lower low. Right? Then the second thing here is area of value. Let's say I open this chart here. As I open it now, then you'll be able to ask yourself, where is my area of value? In identifying area of value, there are a couple of things you can use. You can use support and resistance. You can use trend line. You can use moving average. All right. Some people, you can also use Fibonacci level. Right. So let's use support and resistance to identify. But in a downtrend, you are using what? Resistance. So in this case, you are going to use resistance. As I click on this, so if I click on this, you discover that here, since we are seeing this market here, you discover that here will serve as so what you can do to identify your area of value is to come here, pick this. When you come here, you can be able to trace from here this region. As you can see, when market break below here, sorry, let me arrange it very well. All right. So as you can see here now, serve as resistance level. All right. When market break below here, come back here and retest this resistance. Now it's heading to this resistance. By the time you identify here, then you should be expecting that this region here is what? is area of value. Area of value. Remember, what we want to identify is area of value, because we have already identified market structure as downtrend. Now we are talking about area of value, and to do that, we use this line to identify. Since the market is going down, all we do is to look for selling opportunity. Alright, but where do we sell? Where we sell is at area of value. Alright, so right now I have just drawn this thing showing you, okay, see how to identify area of value, because here serve as resistance and market is coming close to the resistance. So in this case, if you keep moving, market, have you seen it? So at this point now, if I extend this, you discover when market come here, so you can see if it gives you this candle. See this candle here. So when you see this rejection will serve as what? As your entry trigger. Alright, so by the time you take a look at it, you see this rejection, there's a candle here. I'm trying, this thing is blocking it a bit. So this candle serves as a rejection. So when you see this rejection here, which can be pin bar, it can be engulfing candle, it can be morning star, twinser bottom, whichever one. So it depends. Just like I show you some couple of patterns before, I show you hammer. I also explain to you, if you have not watched the video, you can go and check it out. So I show you hammer, I also show you engulfing pattern. So any of them that form at this resistance level serves as what? Entry trigger. In this case, you can see market reach here, it forms this kind of doji. The market reject. As you can see, market start heading down. So when you spot this, what you do is you come here, you can choose this. When you want to short, as you can see, you pick this. So here serves your entry. By the time you enter here, your stop loss should just be below here. One of the way you can use to calculate your stop loss, you use what we call ATR. ATR will help you to identify the right stop loss, because if you start new, it may be difficult for you to just say, assume, okay, here is your stop loss, here is your take profit. So for you to calculate the stop loss the right way, you need to use what we call ATR. For you to do that, see what you're going to do. You're going to come here, come to indicators. By the time you come to indicator, you click here, then you come to see average true range, or if you cannot already book that one, you can just come here, find it, you see average true range. As you click on it, or you come here, just type ATR. Alright, as you can see, average true range, that is ATR. You click on it. So once I click on it, as you can see, it will appear here. I think network is a bit delaying it. So it's already appeared like 2 times. Like I clicked on it 2 times, up to 3. Let me delete some of them, alright, because what we need is only one. Alright, so I think I'm having, okay, you delete it. I need only one, so let me delete some of them. Okay, right now we are ready. So by the time you place this, so let's say the market is here, immediately market come at this zone, which is your entry area of value. So you see this thing that this like dojo or any of those candle shapes that I show you, or some other one that you can see. So when you see this rejection along this region, the next candle open, which is this region, you should be able to click your buy. As you click, I should be able to sell. So, but if you say here, where do you put your stop loss? Let me remove this resistance so that you'll be able to see what I'm saying. So, since we have already identified here, the next thing you need to do is you're going to see 180R from this point. The peak of this week, as you can see, there's a week here. The peak of this candle that closed before your entry, use it as your 80R. By the time you place here, you come here. Let's say the market close here. Copy this number here. There's a number you will see here. ATR, as you can see, ATR here. But there's one thing I want you to do. When in this ATR value, you see what we have here in default setting is 14. But if you are trading in a daily time frame, like me personally, that's how I do it. If you are trading in a higher time frame, like daily time frame 4 hours, especially daily time frame, I tend to change this to 20. Why? because we have 20 days in a month. So remember, you can use any one. There is no right or wrong way to use it, but I prefer to use that one. What this ATR do is that it calculates for, if you use 20, it's going to calculate 20 candles before your entry. You understand? Before that candle, the current candle, it's going to calculate the average true range, how the volatility within the last 20 candles. If you use 14, you're going to calculate 14. If I'm trading in a smaller time frame, let's say from 1 hour down to 3 minutes, I'm going to be using 14. All right, so you can decide to use your own the way you like, but this is the reason why I prefer to use. For that reason, I'm on daily chart, so I'm going to change this setting. I click on setting here, then change it to what? Instead of 14, I'm going to change it to 20. All right, so I change it, I click OK. So once I change it now, then by the time this candle finish forming, this place that is our area of value, and we just generated entry trigger. As a result of that, you just copy whichever number you see here. There's a number that will appear here, right? So this number here, copy it. By the time you write it down, then carry this, use this thing, place it on top of here. You can see there is a number you are seeing at this edge. Copy that number. All you need to do, for instance, you see this place I placed. As you can see, we have 1.14818. All right, copy that number, then plus this number you see here, which is the ATR number. That automatically becomes your stop loss, which means if you plus it, whichever value, let's say for instance, it give you this number, which is 1 point. For this, you see this red, which is 1.15524. That becomes your stop loss. So you're going to place your stop loss there. You can pull this. All right. Okay, let me take this. So by the time I pull this, I place it here. Then this red line becomes my stop loss because I already calculated it as 1 ATR. All right. By the time I calculate it, then the next thing is where should be my take profit. My take profit should be the next resistance level. As you can see here is the resistance level. Sorry, support level. The next support level, the possible support level. So I'm going to drag this. Let me zoom out. All right. So here I will take my profit here. But if you are in a strong downtrend, like you can decide to take 50% of your profit here while you still hold your remaining 50%. All right. Or if you want, you can decide to take all your profit here. All right. Because if you want to take the idea of taking 50% and still leaving the other one. Sorry about that. It's because in a downtrend, you discover it's creating high, you keep breaking the possible support level. So there is tendency for you to still break here. As a result of that, you take 50% of your profit here, while you still leave 50% of your profits to take at the next level, the next possible level. Alright, guys. So that is how you enter a trade in a downtrend. What the sample I show you now is in a downtrend. Let me go and find it so that we can be able to show you another uptrend. How you can be able to place trade in an uptrend. Remember, everything remains the same in terms of market structure, area of value, and the entry trigger. So when, let's say for instance, here we have an uptrend. All right, an uptrend. As you can see, market after market breakdown this year, we started seeing market heading up like this. So in this scenario, what do you do? What you do is that here, sorry about that. See, here becomes a support level. So when market is trending up, it tends to pull back to support level. You need to identify your support. The first thing you need to do is to identify your support, right? So in this case, let's say for instance, market is heading up, then it pull back to this level. All right. In this case, as you can see, market already come here, break above, then it pulls back. As you can see, market pull back here. Let's say. So remember, the first thing is what? Market structure. The market structure in this case is uptrend. All right. So having identified that it's uptrend, let me delete this line so that you'll be able to understand what I'm doing. So having identified that it's uptrend, the next thing, as you can see, let's say for instance you meet this market here. Let's just assume. Now my network is kind of disturbing. Okay, let's say you meet this market here. As you can see, market is on an uptrend, and what's happened is that you can come here, draw this place automatically becomes your support level. All right. So as you can see here, when market come down to this level, then push up, on coming back to here is a support level and we are in an uptrend. Then the next thing that happened is that, as you can see, there is an engulfing candle. As you can see, this candle, let me bring it out. This candle engulf this one, which automatically generates what? Entry trigger. This becomes entry trigger. Why here is what? Area of value. This line that I drew here becomes area of value. So once you see this kind of line, this kind of engulfing candle, it may be pin bar, it may be any of those candles that I explained to you, or other ones that you can see or you must have seen. So all you need to do is to do the same thing I did before. Just come here, 180 from here, you'll be able to see that the peak of this candle before your entry. All right. Then whether wick or real body, put this straight line here. In this case, you can see we have 1.16047. All right. Then come to this, copy this number as well. All you need to do, because you are buying, your stop loss should be below. You understand? So which means you are going to minus. You are going to minus, which means the number you have here minus 180, which is the number you have here. So whichever number you have becomes your stop loss. Let's say for instance, by the time you minus that number and your stop loss lands here around this region, which means you are going to put this, for instance, then here is your entry. Immediately this candle that engulf this small one closes, you buy here. As you buy here, then your stop loss will be around this region. Let me just move a bit. You see, you put your stop loss at that number you minus. All right. Then why your first take profit? Note your first take profit should be around here, because as you can see, market reach here, the high, then reject. All right. So here automatically becomes your first take profit, while your second take profit you can scale it up to the next possible resistance level, or you can use Fibonacci. But I don't want to. That would be a different course for me to show you how you can be able to apply Fibonacci when you are trading. All right. But this place should be your first. Why? Because market reject in this region, there is probability for it to reject. But all you need to do is to take out 50% of your profit while you still remain the other.